Well, I want to go straight to that inflation call and go back to what you told us at the start of the year, where essentially what you were looking for was inflation to come down a little bit more, then pick back up towards the end of the year. Are we seeing that pickup maybe ahead of schedule?
That's possible, but I would note that the 2 consecutive months of inflation upside surprises came from different sources. So the January bumper print was mostly because of core service, and the February print was driven by hotter than expected goods inflationary pressure. So I think the jury is still out there in terms of if we are seeing the trough of this inflation roller coaster. Our view is that actually there is room for goods deflation to bring inflation down further. But when that runs its course, which is more likely later this year rather than now, service starts to dominate. And that's when wage pressure pushes inflation higher. And ultimately, we're looking at the trend settling around 3% rather than 2%. But that roller coaster is for later this year rather than right now. And right now, I think the bar is pretty high for markets to abandon this narrative of immaculate disinflation, which is why we're positive on risk sentiment and we're positive on US equities at this moment.